Welcome back. Just a bit of word on the market. It's getting lower now once again. So that first dip gets bought on days like today, which happened. Now is the second dip. This is the test of the market because, like we pointed out yesterday, the market's made some kind of top and runs the risk of making a double top. So with the classical indicators in terms of the put-call ratio, the India VIX, the advanced decline, all of that. So that's just a point I thought you should keep an eye on. And right now seeing a bit of a slip. Arvind Fashions that settled at 575.4 in pre-open. So
okay.
I don't know. I mean, I
was expecting a bigger number, but anyway, let's wait and see how it settles after the trading starts. Okay, with that, we continue our celebration of International Women's Day with yet another very powerful person in the financial space. Joining us now is Sonal Verma, the economist from Nomura. Good morning, Sonal. We would have invited you anyway because there are this rather dramatic statements from Draghi and what that might mean for liquidity in the global space. But before that, I just want to ask you. You have a young child, right? And you're working out of Singapore now. The last couple of days. How how do Indian companies compare with foreign companies in terms of giving women more space to chase both career and family?
Hi, Lada. I mean, my career, of course, has been more with global MNCs. So that's sort of the perspective I can share. Although, whether it's an Indian company or a foreign company, I think the broader goal of gender equality is something that they do still, follow. At Nomura, we have something called, Women in Nomura, what we call the WIN network. So that essentially, helps female leaders across the firm connect with everyone. We have sort of mentorship programs. We have networking events. So essentially helps to build more awareness within the firm. So helps diversity and inclusion and also gives an opportunity to, other female leaders. But I do think that, awareness of this issue has increased, whether it's at the government level, at a company level, but it's something that's also more individually that we need to pursue. And, coming back to economics, I think, one of the biggest concerns is the very low female labor force participation rate in India at under 30%. Purely from economic perspective, that's sort of a low-hanging fruit for us to increase the participation rate so that we can contribute to economic growth.
Sonal, hi, good morning. I'm glad you brought that point out because some people point out that it's not so much a problem with the employment structure, but more because a lot of women are perhaps moving out to study, which would obviously be a good thing. What do you think the reasons for this, fall in women labor participation rate could be?
Well, it's hard to say. I mean, there have been, we've actually seen evidence in all directions. And what is typically seen in the labor force female participation is essentially a U-shaped. So when per capita incomes are very low and when per capita incomes are very high, female participation tends to be low. And, as per capita incomes pick up, participation tends to pick up. So ideally, in India's case, there should be an increase in participation. I think the broader support environment of companies in terms of creche facilities, work from home, flexi work environment, I think all of that, as well as the value system, family culture, etc., needs to be quite supportive for women participation to pick up in India. So I think it's quite hard to say it's because of X or Y. But in general, I think the supportive structure, like I said, from, not just the government or companies, but at an individual level, that needs to help increase participation.
Okay. Now, finance. Sonal, how are you interpreting, what looks like competing provision of competing dovishness? You saw a serious dovishness since October from Jerome Powell, and now Draghi is matching it step for step. You never know if Japan will be the next. In this environment of what looks like global slowdown and therefore higher infusion of liquidity, or at least maintaining liquidity, what is in it for India? Should we worry about lower growth? Should we expect there is more space for rates to fall and RBI to cut?
Yes, Lata, I think this is a big change in 2019 that we are seeing a synchronized global slowdown. US, China, Europe, it is a synchronized slowdown. And on the policy side, and we do think that the slowdown is here to continue at least for the next 6 to 9 months. From the policy front, what it has led to is more of a pause. I won't say we are back to liquidity injection, because Fed is still likely to taper down its balance sheet this year. And we are pausing on Fed hikes. ECB has delayed its rate hike. So it's a pause on the rate cycle. It's not an easing yet. So that's the macro environment for us here in India, and therefore I think we need to be very clear about what to worry about and what not to worry about. This global environment clearly means that growth is going to be the biggest challenge that India is going to see. And therefore, I think that the projections that we have here of growth picking up from 7% this financial year to 7.4%, which is what the central bank is forecasting next year, looks quite difficult. So growth is the biggest challenge we face, and what we should not be so worried about, therefore, is the inflation outturn. Again, what we should be worried about is the fiscal side, because if growth doesn't pick up, that has implications on tax buoyancy, and fiscal consolidation is going to become a big challenge. And this is an environment which is positive, for monetary policy and interest rates.
Okay, just want to make a point here. The Asian markets are seeing big decline now. Yeah, Shanghai is down 3%. Yeah. Hang Seng is down 1.5%, almost a 500-point knockdown now on Hang Seng. Kospi is down 1.2%. So there's a fresh wave of global selling which is emerging. And now look at dollar rupee as well. So, this is a bit of a dollar-driven move that you have right now in the emerging market today. That always is, a move which happens across the board in asset classes, and that's what you're seeing right now. So don't lose sight of that. The market showing clearly now trading at the low point of the day. Looks like now longs are trapped, and we could be in for a bit of a tough day.
Okay, I take your point. Yeah, this currency bit was something which was staring at us, also because India had strengthened a bit more. Sonal, on that issue, since you touched the fisc, as it is, the revised estimates look too hard to believe. Tax revenue estimates have been placed at 19.5. If you looked at year-to-date data that's available, that's I think for the first 10 months, they've risen by 5%. I mean, to expect that they're going to reach 19.5% in the next 2 months looks already tough. So there is a goodish bit of fiscal loosening. And it looks like there are lots of OMOs. Another 25,000 crore will probably get announced. At least the market is expecting for the second half of March, and perhaps rate cuts as well. Is there a danger of synchronized monetary and fiscal loosening, or is this exactly what the doctor ordered now?
Well, I think at the margin, I think this is possibly what the doctor ordered, particularly on the monetary policy front. While we are seeing easing, let's put this in context. The context is that, we've just seen a bit of monetary fiscal easing as of now. What are the negatives we are seeing on the growth front? One, financial conditions, I think, still are tight because of the NBFC crisis. Second, global growth is slowing down. Third, like you said, the government fiscal revenues, the tax revenues are likely to disappoint. And therefore, to get close to the deficit target, we will see government actually pull back spending. So fiscal will actually be a negative impulse in growth. And fourth, given sort of the election uncertainty we are in, typically this is a period where investments in any case tend to get pushed out. So we need to balance out, what is the positive impact of the rate cut and the liquidity easing and the delta fiscal impulse, which is going more to the farmers, vis-a-vis these four negative factors that are there. And I think, our overall assessment is that the negatives actually outweigh still the positives, because the monetary policy transmission transmission's not happening at the same speed. So this is what the doctor ordered.
Okay.
I wanted your thoughts on what's happening with across the globe, Sonal. You know, the Chinese slowdown. I mean, we were just referring to how Asian markets have fallen quite a bit. What will the ripple effect be on other markets? It's already affected a lot of markets in its own orbit, whether it's, you know, Indonesia, Malaysia, Philippines, etc. But do you see a slowdown, a drop in, say, FDI worldwide because of these protectionist policies, immigration policies, etc.?
Well, I think there are multiple challenges that the world is facing right now, right? I mean, China being one of them. US fiscal policy incrementally now is going to be a drag on US growth. Europe, Italy and Germany, there's a big problem there. And while we are focusing a lot on US-China trade tensions, the fact of the matter is that China was slowing down despite these trade tensions because of the internal deleveraging that they were doing throughout last year. The property market there is slowing down, and we haven't seen sufficient policy measures to reverse the down cycle in the property market. And while there's a focus on infrastructure spending there, there aren't sufficient good infrastructure projects to get it running. And this is not it. I mean, we are also seeing a global capex cycle coming down. There's the electronic cycle, which is slowing down. Protectionism, you mentioned in general. So I think there are lots of headwinds that are there. And for the region as a whole, therefore, what it clearly means is that growth will slow down, led by exports. We are starting to see inventory shipment ratios start to increase, and this is likely to have a negative impact on investments throughout the region. And the more exposed, of course, are the open economies of the region. Which are getting hit both because of China as well as what's happening with US policies.
Okay, just two numbers before we conclude. What's your growth forecast for FY20 and how many rate cuts in 2019?
So we're expecting a further slowdown FY20, 6.8 in FY20 versus 7% in FY19. And monetary policy, we expect another rate cut in April. And I think the way macro factors are shaping up, we do think there's a 20-odd% probability that we could actually see another 25 after that.
All right. Sonal Verma, always a pleasure speaking with you. Thank you very much for joining us and have a great year ahead.
Thank you.
Anuj.
Yeah, let's talk about the market now. So 45 points lower on the Nifty, 111 points down on the Bank Nifty. Perhaps on expected lines, you'll have to say. The mid-cap index also down about 0.5%. Yesterday, the market had given you that indication that it was ready for some kind of reversal. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba are back with us. Ashwini, how are you reading this last bout of weakness, and what would be your strategy now?
Well, I like to add on weakness. So from 45,000 calls, we've gone up to 60,000 calls. Because once this weakness cleans out, it'll take half the time to get back to fresh highs. We are heading to 950, 11,000. So that's a space where people should start building into positions, because after that, once it turns and you chase behind it, you lose half the gains. So as long as 10,950 holds on, you should continuously build long individual stop of 1535, target of 1580. Bajaj Finance is a buy with a stop of 2700, target of 2850. And L&T Finance is a buy with a stop of target of 151.
Motors is the biggest Nifty loser. It is down almost about 3.5%. Volumes being, on Tata Motors. Of course, weakness in JLR sales, and additionally, there is further weakness in the Chinese markets, etc. That could mean incremental fall in sales going ahead. Mitesh Thakkar and Prakash Gaba are also with us. Prakash, on Tata Motors, can anyone take a fresh short position, or is it too late to do that? And what are the other stocks that you'd be looking at?
Yes, I think Tata Motors could be a good shot here as well, and just have a stop to today's high, maybe around 188 or 189 should be fine. I think it can see a slide to around 172, so there's, I see some kind of support emerging. Will it hold there? I don't know, but looks like 172 is a good place to book profits if one is short on Tata Motors. I have today one long, one short. Raymond looks like a buy to me here. Target on the upside is in the vicinity of 850 zones. Stop would be below 800. Jindal still looks like a sell to me. I think it can see a slide to around 155 zones. Stop above 166 should be okay.
Okay, Mitesh, your thoughts? Is a short opening up on the index or are you buying this dip? And what are your stock calls?
I want to buy the dip, Anuj. Maybe, around 11,000 mark, we're roughly about 10 points off. So maybe around these levels you can start accumulating and keep a stop below 10,950. My sense that the expansion is continuing, so chances are that you might not get stopped out, but you will eventually top the recent highs and head towards 11,100, then 250 eventually. So this is good levels to buy with a stop at 10,950, and I have 2 buy calls. Indigo is a buy with a stop at 1215 for targets of 1265, and Godrej Industries is a buy with a stop at 504 for targets of 535.
Okay, well, low point of the day right now, ladies and gentlemen, down about 100 points on the Sensex, and the market breadth has worsened. Over 1,000 stocks on the declining side. Anuj, you think this could be a trend day on the downside?
Possible, Sonia. Look, what happens on these days is in the first nature of the market participants on days like today is to buy the dip.
Yeah.
Like yesterday also. So I think people are perhaps stuck from yesterday's longs and they would have added some longs in the morning. So obviously, the point I made in the morning, I think these things sometimes give you an indication in terms of data and then triggers come. So trigger today is the global weakness, of course. The market was overbought. It needed correction. Look, this is not a breakdown of the market, but it needs some correction back towards the 10,800, 10,850 just to get enough shorts back in the system for the next round of rally. And even in the mid caps, we've had a one-way move over the last 6 or 7 days. That's also not healthy. You need some bit of correction of that. Let's see. For today, I think today's high and today's low become now the reference point to watch. There will be some attempt to defend 11,000. Absolutely no doubt about it. But that's crucial. If that goes, then perhaps we're seeking lower levels.
Okay, well, that's the new listing, Arvind Fashions. It lists at 591 rupees, up almost about 5% odd.
And this is where the problem is. This is where the problem is because you have now this 5% circuit and trade to trade. The value of this stock is say somewhere around 1,000 or thereabout, right? Now what you'll have is with no participation, the stock hitting 5% circuit till it's out of T to T. This T to T business of stocks getting out of demerger, I think is something that the regulator needs to look at because this is not helping anyone.
Yeah, you can't have a one-size-fits-all.
Yeah, exactly. This does not help. Especially at times when the pre-opens bizarrely settled at a price, like we said, this is.
I was shocked. I thought I was reading the wrong price, and maybe there is an electronic problem.
Exactly. So now what will happen is 5%, 5%, 5% till it finds the
till it finds its value. Yeah. Okay, well, that's certainly an issue to discuss at some point in time with market experts. For the moment, of course, we're going to